Today, we're diving into a powerful turnaround story in agribusiness, one that offers a potential blueprint for transforming a nation's most vital sector right from the ground up.
This is an analysis from Alpha Business Media. We're going to be looking at how farmer cooperatives in Nepal are starting to overcome decades of failure to build an entirely new model for prosperity.
So here's how we'll break it down. First, we'll define the core paradox that Nepal's farmers are facing. Then, we'll get into why the early attempts at cooperation just didn't work. After that, we'll look at the modern success formula that's actually delivering results today. And finally, we'll pull it all together into the key principles that make this a scalable blueprint.
All right, so to really get this, we have to start with the fundamental problem, a deep, unsustainable imbalance right at the heart of Nepal's economy.
Now, this chart right here really tells the whole story. You've got roughly 2/3 of the nation's entire workforce employed in agriculture. And yet, this massive labor force generates only about 1/4 of the country's GDP. This isn't just a gap, it's a gaping hole. It points to a deep, systemic crisis of productivity.
And if we zoom in to the individual level, the problem gets even sharper. The average farm is less than 1 hectare. To put that in perspective, that's smaller than 2 American football fields. That's just way too small to get any kind of economies of scale or to generate any real surplus income.
And what all this leads to? Well, it's a classic poverty trap. You see, low productivity means there's no extra cash for things like better seeds or new machinery. And without that investment, well, productivity stays flat. Now you throw in pressures like soil depletion and the fact that so many young people are leaving rural areas, and you can see how an individual farmer gets stuck. There's just no easy way out.
So, you'd think the obvious answer to all this fragmentation is cooperation, right? But here's the twist. In Nepal, the cooperative movement has a long and, frankly, troubled history. And we have to understand why it failed before we can understand why it's finally starting to succeed now.
The idea itself is nothing new. It goes all the way back to the 1950s. But the real explosion happened after 1992, when the number of co-ops just went through the roof. On paper, this looked like a total revolution. But in reality, something was fundamentally broken in the model.
And this quote just nails the problem. All that growth in the number of cooperatives, it didn't lead to any real, meaningful economic progress for the actual farmers. More co-ops didn't mean more commercial success. So the big question is, why not? What went wrong?
Well, the analysis points to 4 huge systemic errors. First off, their entire strategic focus was off. Most of these co-ops ended up acting like little village savings and loan groups, not actual agribusinesses. So they'd give you a loan, sure, but they did absolutely nothing to help you grow more or sell what you grew for a better price. You combine that with poor governance, tons of fragmentation, and a total failure to offer any real commercial services, and yeah, the whole model was basically destined to stall.
Okay, so let's shift gears. Now we're going to look at how a new generation of cooperatives basically learned from all those past mistakes. And the key difference is they don't operate like social clubs or micro-lenders. They run like disciplined, market-focused businesses.
Their success really boils down to 3 pillars. Simple but incredibly powerful. First, they buy things together, seeds, fertilizer, equipment, to get better prices. That's just basic economies of scale. Second, they invest in processing to capture more of the value. So instead of just selling raw ginger, they turn it into dry ginger, which is worth a lot more. And third, they sell together. This gives them the volume and the power to actually negotiate with big buyers, instead of being at their mercy.
Let's look at a real-world example, the Erwadi Ginger Co-op. Their problem was a classic one, market timing. When everyone harvested their ginger at the same time, the market was flooded, and the price just plummeted to around 20 rupees per kilogram. Since they had nowhere to store it, they had no choice but to sell at that rock-bottom price. The co-op solution? It was brilliantly simple. They built a shared, low-cost storage facility using local materials.
And the result? Just look at that number. By being able to hold on to their harvest and sell during the off-season, they could command prices over 150 rupees a kilo. That is a mind-boggling price increase of more than 650%. And it all came from one simple collective investment.
Okay, now the Galda Women's Co-op takes this whole idea even one step further. They weren't just stuck selling at the wrong time. They were totally dependent on local middlemen with no access to bigger markets. So their solution was to move up the value chain. They pooled their resources to invest in processing and solar drying, and, this is the real game changer, they worked to get an international organic certification.
And you see the exact same pattern with cardamom farmers over in the Eastern Hills. As individuals, they were selling these small, unsorted batches to traders and had zero, and I mean zero bargaining power. But by coming together, they could train everyone in how to properly sort and grade their product. And this meant they could create large, high-quality batches that exporters actually want, completely flipping the script on their negotiating position.
This table really just sums it all up perfectly. In every single one of these cases, you see the same story. You start with a clear problem that the individual farmer just can't solve on their own. Then, the cooperative makes a smart, strategic, collective decision, whether it's investing in storage or processing or new equipment, and that one decision leads directly to a measurable economic win, higher prices, new markets, and a massive boost in efficiency.
So what's important to understand is that these aren't just a few lucky success stories. They actually reveal a set of core principles, a repeatable formula, really, a scalable blueprint that could potentially revitalize the entire sector.
And these principles right here, this is the formula. It requires strong, transparent business governance, not just informal agreements. It demands continuous education. It focuses on empowering women, who are often the true backbone of the workforce. It's about building strategic partnerships. And maybe most important of all, it requires a total shift in mindset, from what can we grow to what does the market want to buy.
And this points to the underlying strategic model here. You know, the most impressive results often come from what we can call managed intervention. This is where an external partner like an NGO or development agency acts as a catalyst. They provide that initial seed capital, the business expertise, and the market connections that a new co-op just doesn't have yet. And the explicit goal is to get the cooperative to a place where it can become fully self-sufficient over time.
This leaves us with one final, crucial question. This hybrid model, combining that grassroots farmer collaboration with targeted expert support, has proven to be transformative in Nepal. The question now is whether this managed intervention model represents a new, more effective blueprint for agricultural development, not just in Nepal, but across the globe.